Okay, so let's get into current rates, because when Stu was on the programme maybe 18 months ago, he said, I think we're at the peak, folks, and it's coming down. And then when he came
He
on
was
6 months later, he came in and said, sorry about that. That didn't happen. So do you think we are heading back to some lower rates for people to have some comfort with?
So we're at a period of time now where hopefully I think we're at a much more stable period.
Yeah.
So we did see high rates, and then we've seen rates come down. So you can now get 5-year fixes and 2-year fixes under 4%.
Right.
So starting with a 3.
Okay.
Maybe 3.85, 3.89, 3.75 on a 2-year fix, for example. The problem is twofold, and the Bank of England, who set the interest rates of the country, they have an issue in that on the one hand you've got inflation, which is still sticky.
Yeah.
You've got potentially war in the Middle East again, which might push up oil prices again.
Yeah.
So they're a little bit worried on that. On the other hand, you've got an economy which is not, it's a bit stuttering, isn't it? You're starting to see unemployment tick up a little bit.
Yeah.
So on the one hand, they need to keep rates high, but on the other hand, they need to cut rates. So there's a bit of an impasse at the moment. And the latest Bank of England decision from the Monetary Policy Committee was a bit of a stalemate. So they decided not to change.
Yeah.
So I think what that translates into, I think interest rates are going to be higher for longer. So previously we thought there'd be 4, maybe even 5 cuts this year.
Yeah.
But now we think there might only be 1 more, maybe 2.
0.25% each time.
Quarter of a percent each time.
Okay.
So 3.75 on a 2-year fix, we might get down to 3.5 by the end of the year, but I don't think it will be that dramatic. So there's an awful lot of people waiting, going, interest rates are going to fall, I'm going to wait.
Yeah.
And actually they've been disappointed. And every time there's a bit of a crisis or Mr. Trump tweets something that affects the markets and interest rates go up again.
Yeah, and people are Trump anxious, terrified. That's my latest joke.
Terrified. I love
That's
that.
brilliant, isn't it? You're very
That's
welcome to
genius.
use that. By the way, every time the Monetary Policy Committee gets together, Monty does a little piece to camera on LinkedIn. So you need to follow Monty. And if you're wondering what his name is, it's Andrew Montlake from Corico. So Monty, I love your little updates, and I always watch them and like them. So thank you for that. I get a sense that in the UK, we're settling back down to almost an acceptance that it's never really going to be 1% and 2% again on mortgages.
Yeah,
it's going to be
correct.
3, 3.5, 4, somewhere in that space.
Yeah.
Which, to be fair, before the global financial crisis, that was where we were all kind of settled in anyway. So there's been a decade and more of people being used to getting mortgage rates below 2%, but I don't think we're going to be there again for any time soon. Maybe a generation. Who knows? Is that what you're feeling?
Yeah, 100%. I think people, the last 10, 12 years were the aberration.
Yeah.
The norm is interest rates of around about 3.5 to 5%.
Yeah.
That's the norm.
Yeah. Okay.
And the credit crisis in 2008, 2009 put us into this decade of ultra low interest rates, which were that's not the norm.
Yeah.
So unless there's another crisis, and
Yeah.
we hope there isn't,
Yeah.
unless there is, we're back to that normality I was talking about earlier. So where Bank of England base rate should be between 3 and 5%, and that's sort of and that's quite a big difference. But I think at the moment Bank of England base rate is 4.25. It might go down to 3.5, and I think that's sort of normal.
It's about right.
Yeah, it's about right.
So if I was about to go through remortgaging, my own personal experience is I was sat on a 5. The 5 ran out at the worst time. You guys helped me, which was brilliant. They helped me personally, so they were brilliant. You guys helped me. I then sat in on another 2. I went for 2 rather than 5 because I thought, it's bound to get better. I'll just stick with 2.
Yeah.
And then when that comes up again in April 27, I don't know what I'll do then. I'll have another think then. But if I was going through the remortgage process again now and I was thinking, what's going to happen with the interest rates? What advice would you give to people who are remortgaging right now?
Yeah, so we always take advice very personally in terms of what that personal situation is. And it depends a lot about what you think about what interest rates are going to be,
Yeah.
and your capacity to absorb slightly higher rates, or actually do you definitely need something low? So you've got to remember a fixed rate is, to all intents and purposes, it's an insurance policy.
Yeah.
So if you're someone who's going to, lie awake at night worrying, are interest rates going up or interest rates going down before every Bank of England decision, and your budget is quite fixed, then actually a 5-year fix now, especially if you can get it at around the 3.8, 3.9%, is probably a really good option.
Yeah.
But if you genuinely think that actually, do you know what, my life might change in 2-3 years, I might change jobs, I might have a family, I might move, I might do this, that, then actually maybe a 2-year fix or even a tracker rate with no penalties, if you really believe interest rates are going to fall and you can afford that risk that if they go up, you can afford it, is another decision. So basically, there's no right. People think there's a right or wrong.
Yeah.
I should take a 2-year fix now. I should
Yeah.
take a 5-year fix. The answer is do what's right for you.
Yeah.
And use a trusted advisor to work out what is best for you at that circumstance. And then don't look back in anger.
No, I love that song, by the way. I love that song. I knew we'd get a song reference in here. Don't look back in
Love a
anger.
bit of Oasis.
All of
There
those
you
people
go.
who've got the Oasis tickets, I saw them in Nebwickin whenever it was
Yeah.
in '96. So, and when they were good and he could still sing.
I'm looking forward to it personally.
Brilliant. So, what's more prevalent right now, fixed rates or trackers? Are trackers coming back?
Yeah, trackers are coming back in vogue because there is a general belief that over time interest rates are going to fall.
Okay.
But you do have to be sure that they could go the other way.
Yeah.
And we have seen, let's take the Liz Truss boo debacle.
Yeah, boo for Liz Truss. Liz Truss, boo.
Yeah, and I can't talk about it for long because I get very angry. But that was a good example of something coming out the blue that suddenly meant interest rates shot up.
Yeah.
And if you're on a tracker, that would have hurt.
Yeah,
Definitely.
would have done, absolutely.
So it's all about do you want that security? But they are coming back more in vogue because more people do think actually we're in a more stable period. Love or loathe Labour and their policies, it does seem to be a stable government.
Yeah.
And that stability and a bit of boring politics is what we need.